Hi, Jonathan York, my financial partners, looking at the investment markets. Really still pretty interesting times, and certainly in the US market. Obviously, you've got the inauguration of President Biden tomorrow. Still yet to see any sort of concession speech or congratulations from President Trump. Also, as well, he's still yet to issue a sort of a farewell speech as well. And obviously, there's still the impeachment trial hanging over the president as well. And that'll be very interesting to see how that sort of plays through, because certainly quite a few senior Republicans are now coming out and say, actually, you were responsible for the riot. You did incite the crowd. You sort of pumped them up and then sort of set them on their way. Also, in a bizarre set of circumstances, President Trump aims to lift the travel ban on Europe and Brazil and other sort of countries that have this new sort of strain on January the 26th. Now, really, how that can be considered in the US's best interest is just mind blowing, really. By then, the new administration, Biden administration, will be in power. They've sort of come out and said that will not be the case. Those restrictions will not be lifted. So really just be interesting to see what happens once Biden does assume a sort of full responsibility and full power. Certainly he's got some pretty big hurdles to try and climb. Obviously the biggest will be the COVID and getting those vaccinations rolled out. Also as well, what will be very interesting is to see who President Trump pardons on his last sort of day in office. A lot of speculation that he will sort of include himself and family members. As yet, they have not been sort of substantiated. But on the back of that, the US economy is actually doing reasonably well. Certainly, the earnings season is pretty good. The banks, the major banks that have reported so far, JP, Citi, and Goldman, have really sort of crushed the expectations on earnings. Certainly Goldman's was way better than expected. JP Morgan was a pretty good beat, and so was Citi as well. Interesting as well, you're starting to see interest rates just nudge up a little bit. US 10 years now sort of just around that sort of just over 1%. And interest rates, I say, are just edging up just a little bit, which could cause some issues, certainly for some of the bond portfolios out there. But if earnings continue to go as they are, you've still got a reasonable economy. You've got earnings pushing along at a pretty good rate. You've still got a very supportive Fed. You've got a supportive government, fiscal policy, and really trying to keep the economies going as they get this sort of COVID trying to get it under control with the vaccine rollout. So at present, it still seems to be sort of any dips have got to be purchased in shares because really there's still very little alternative out there in terms of looking for investment returns. One scary fact out there in the US, there could be as many as 500,000 deaths from COVID by the end of February. Oil's still trading pretty well, well above that sort of $50. And again, that's just going to be interesting to see how that sort of plays through for the remainder of the Northern Hemisphere winter. UK and Europe still doing it pretty tough. This new strain in the UK is really very highly transmissible, and it's just interesting to see if they can try and get a handle on that, because at present the health system is pretty close to breaking point. Now, all the time the vaccine is being rolled out, but it's still a big uphill battle just trying to get on top of this virus. In Australia, Australian government certainly coming under a little bit of pressure out there, mainly to do with the Australian Tennis Open. They're allowing the tennis stars to fly in and sort of quarantine. What hasn't helped is the fact that on a couple of the flights there have been positive cases, so they now have to hard quarantine, and it's just causing a little bit of a PR nightmare out there. Now it's obviously in Victoria. New South Wales and Queensland seem to be okay-ish, relatively low cases. That sort of spike in New South Wales appears to be sort of under control now and sort of getting back to sort of a slightly more normal sort of way of life. Now here in New Zealand, the government facing quite a bit of criticism as well, because they're not looking at rolling out any sort of vaccine until at least sort of April, May time. Now that's all very well, but you've still got New Zealanders returning to New Zealand, having to quarantine, bringing in this new sort of strain out of Europe, the US and the UK. And while that's sort of in managed quarantine, it only has to get out once, and it really could be quite a major issue for the government. And as I say, at present, the workers in those managed isolations haven't got the vaccine. Interesting as well here in New Zealand. Negative rates from the Reserve Bank appear to be sort of been taken off the table now. We've seen a slight nudging up in sort of short-term rates. Nothing too dramatic, but just a slight sort of firming of the rates in the short term. What is quite interesting now on the projections from the Reserve Bank, OCR neutral rate is now around sort of 2.1, 2.2. But not really looking for any changes for at least sort of 18 to 24 months. Now, given that low interest rate environment, obviously it's still going to stoke the housing market, because I say you have record low interest rates, you've got very cheap mortgages, you've still got a very limited supply, and you've got increased demand. And obviously for savers, they're obviously struggling with the low interest rates, and that is obviously helping equities as people look to try and get some sort of return coming back versus the sort of low 1% gross for sort of term deposits. So if you are looking for income, there are plenty of alternatives available out there. And if you're interested in discussing what is available, call us at 0800 867 323 or go to the website www.bayfinancialpartners.co.nz for lots of interesting articles. And we look forward to speaking to you soon.